Studio is John Noonan from Thomson Reuters, Claude Walker from Simply Wall Street, and we'll welcome into the conversation Julia Lee. She's joining us from Bell Direct. Julia, there is a little bit of breaking news coming out right now from Specialty Retail, saying that they've got one of their chair people retiring, Anne McDonald, so nothing hugely, I guess, price sensitive when it comes to, they've also got a new appointment of a Chief Executive Officer, Phil Ryan. Specialty Fashion, obviously you don't have that breaking news sort of in front of you, but any general comment about the company and its direction?
I guess Specialty Fashion Group is one of these companies that has changed quite substantially over the years, and it's now got one key brand that's doing extremely well, and in a lot of ways it reminds me of Premier Investments being driven by Smiggles. So I think the brand that's been doing well is called Chic Chic, and that's really behind the growth that we've been seeing in terms of specialty fashion. And I guess that's the case with a lot of companies with many brands under their names, that if you do see a company that is doing well, or a retail business that is doing well with strong sales, then rolling that out can be a strong growth strategy in the retail space.
Okay, so that's Specialty Retail. Thank you for that. I know that news is just breaking. Can we talk about Santos? Today it had a strategy day. At one point, Julia, the shares were at an over 3-year high, so it's planning to double production by 2025. But Santos shares ending the day down 1%. So what's the verdict on this strategy update?
Sorry, I'm just having audio problems, so the only thing I could hear was strategy update. I think that was around probably Santos, which had its strategy day today, which was the only company really with a strategy day. And I guess having a look at Santos, it wasn't bad for the stock. It reached a 3-year high, and I guess today was all about growth initiatives. And its targets for above 100 million barrels of oil by 2025. This is pretty significant. That would almost double 2017's production, which was at 59.5 million barrels. And just to put it in perspective, to give you an idea what Woodside Petroleum is planning for this year, it's planning on 87 to 91 million barrels of oil. So it'd be a huge competitor to Woodside Petroleum as well. And this is all because of its acquisition of Quadrant Energy, which holds acreage in the Carnarvon Basin. So altogether, look, some positive news coming through from Santos and some very strong growth plans coming through, and that 100 million barrels of oil by 2025 is pretty impressive, but given the acreage that it's also acquired, it means that the cost of production should come down as well.
Julia, hopefully you can hear me now, but when you see that Santos's share price is up 35% so far this year, I mean, how does it look as far as a buying opportunity? I know that it has, it's come down a long way when it was in the midst of its, real sort of debt crisis that was ongoing. So is Santos a potential buy for you?
When you've got the underlying oil price that's been rising around about 30% in the financial year to date, and the energy sector being one of the best performing areas on the market, and then you have a company that's looking at aggressive growth, it's a really nice formula to be in late cycle. So you've got oil, which is running quite hard and the potential to rise even further. You have Santos, which is also in that growth area. I guess what would flip the growth being a positive would be if we did see the oil price trend moving down lower, but that doesn't look to be happening anytime soon. So this is all about the underlying oil price, and this company is one that is magnified when the oil price rises. So we have seen energy stocks, one of the best performing areas in 2018.
Okay, let's talk Nufarm, ticker code MUF. Most people know it. We saw it swinging to a loss. We've got the drought really cutting herbicide sales. That's led to a buildup in inventory. Shares are in a trading halt because it's doing a capital raising. If those shares have been trading right now, just based on the update, what do you think they would have done?
I guess having a look at Nufarm, and it's been a pretty difficult time, but I guess the key thing that we're watching here is this capital raising. They last traded at $6.70, and this capital raising at $5.85. So it is a significant discount. It's a 3 for 19, and they're looking to raise just over $300 million. But not only that, we've seen the profit result coming through as well. And the expectations, the consensus was for $100 million. We've seen an underlying net profit of $91.5 million and a loss of $15.6 million. Look, the capital raising is to strengthen the balance sheet, and they're also looking at bolt-on acquisitions, which probably isn't a bad thing given that the sector is depressed because of what we are seeing in the area of drought and crop protection at the moment. So this is a company that looks at crop protection and seed technologies. There is a risk because we are seeing a drought that you will get lower crop rates, and so some of its products won't sell as well. And there's also risks in terms of glyphosate with that court case over in the US on whether it is a significant carcinogenic. But on a positive note, one of the things we're watching really closely is that it will be growing canola with high levels of omega-3, and for any health nuts out there, that you would know that omega-3 is quite important for human health, but it's also important for fish health. So for some of these fish farms, so things like salmon and tuna, this would be a significant fish feed as well. So I guess that's one of the exciting things to look for in terms of Nufarm, but at the moment the drought is biting.
All right, Julia, just a final thought. I'm glad you can hear me. It looks like you can, about the market overall. Not managed to stay above that 6,200 level. It was a risk-on day around the region. I know that it's the banks that really did weigh on the market overall to a large part, but what's your sort of general sense about, where we sit right now on the S&P ASX 200?
Look, I think we are just treading water, and at the moment for the month of September we're down around about 2% so far, but if you have a look across the major indices, whether it's the top 20 or whether it's the top 200, the small cap index or the mid cap index, we've seen a negative performance of 2%. So not a huge difference in how the different indices are performing. But in terms of our market today, I think it was really about the banks which underperformed and continue to underperform throughout the afternoon. And with the banks, we will be getting the interim report into the Royal Commission, and that's due on Friday. So this is going to be around the policy issues relating to the first 4 rounds. So that's mainly around consumer lending and financial advice, the loans to small and medium enterprises, and also the issues related to remote communities. So look, this is a risk for the banks. We know that they've already seen an increase in terms of compliance costs and regulatory costs. So we will be watching this very closely to see what the impact is in terms of the sector. And the final report is due out in February, and that's going to encompass a greater field, including superannuation as well as insurance. But given the banks are facing a fair amount of headwinds, including a softening housing market, increased competition, increased funding costs, it's really hard to be positive on banks longer term, and at some point we'll probably see bad debts starting to tick up as well.